Good afternoon, and thank you for joining us for CSC's second virtual workshop, Understanding and Improving Your Credit Score. I'm here today to give you guys some tips, some tricks, and some ways to improve your credit score. As you'll find out in this workshop, a credit score isn't just a number, but it's a key to your financial success. Good credit, it takes time, it takes effort, and it takes discipline. But if you stay steady, it's well worth it. So let's get into it. Just so you guys know, put some comments and some questions below in the chat. Also, I'm going to go through each slide. I'm going to go through and review each slide and go into detail after. If you have any questions, put it in the chat. We'll be sure to get to it afterwards. So, what is a credit score? A credit score is a 3-digit number that represents your credit worthiness based on your credit history. In a nutshell, it's the trust. So, this is what I like to call your financial GPA. Just like a GPA in high school that measures your academic achievement, so does your credit score. It measures your credit achievement. This score gives you a measure on your financial achievement and an emphasis being on credit. I say that because it is possible to make good money and still have a bad score, or vice versa. Make a little bit of money but have a fabulous score. It's all in how you manage your credit. So a typical score will range from 300 to 850. And if you have a 0, or what we like to call a no score, it's typically because you have no credit history or very limited history. So moving right along, why is your credit score so important? The why is important when it comes to your credit because I think so many suffer from a bad score because they really don't understand the true weight of what that score means and when it comes to your personal finances and your financial goals until you're in need of that good score. I really think I should have posed the question, what is a good score and why is it so important? A good score is a door to financial opportunities. So let's uncover what doors those might be. So when looking at your credit score, it's lending decisions, interest rates, rental applications, job opportunities, insurance premiums, and some other factors is simply peace of mind, the ability to pivot and get through financial hardships. So when we talk about a good score, what that means when it comes to lending decisions is that's that approval. It means great interest rates, approval for that apartment that you might be looking to rent, clearance for job opportunities. For example, when I got a job here at the credit union, I had to have a good score in order for them to trust me, especially around personal information. So credit scores are so much more. The most important thing to note is low scores, they pay more. The savings that a good score can offer you can be quite astonishing. For example, let's say you have a $41,000 car loan and a 720 credit score compared to someone with a credit score around a 675. They're going to pay approximately $3,500 less. Let me say that again, $3,500 less. If I had $3,500 today right here on the table, would you take it? Of course you would. And then you would reinvest that in something much better. So low scores pay more, and that's why it's important for you to have a better score. In addition, a good score can give you that peace of mind, knowing that you have access to financial resources. When I say pivot, I mean the ability to move in different financial directions. You have the options for different types of lending, competitive rates, and rates that are going to best match your personal finances. So, moving right along, let's talk about your credit report. So, your credit report, what I like to call your adult report card, it's going to show activity, it's going to show past performances, it's also going to show list of accounts. A credit report is where your financial history lives. So, yeah, we call that your official adult report card. I know, not us being graded on something that we never had training on. Yeah, most of us never got that education in high school. So today we're going to give you some of those tips and education so that you can make better decisions. Your credit report gives financial institutions and others an idea of your credit activity, such as payments, balances, and etc. So it kind of lets them see how you performed in the past, which gives them insight on how you could perform in the future. After all, financial institutes do have an obligation to make sound financial decisions when choosing to lend to you, especially when it comes to the higher dollar amounts. So it's also going to show diversification of your report, from your loan types to different lenders and things and lenders that you are working with. Just like in school, today I'm teaching you to the test, with the test being your credit report. So I want to make sure you're excelling in areas that will help you win. Those areas are going to be areas such as payment history, amounts owed, and length of history that we're going to get into just a little bit later. So, what is actually on your credit report? When we talk about what's on your credit report, one thing that's going to live there is personal information. The next thing you're going to see on that report is credit accounts. Then you're going to see credit inquiries. You're also going to see collections, public records, and creditor information. So for the most part, there are 7 sections of a credit report. To make sure you understand where to find this information properly and review it so that you can analyze these areas, we're going to go over a TransUnion report. It's important that you understand on your credit report where to find these areas. Note, some of these credit reports may not have public records, but if it does, most of the time what lives there are bankruptcies, liens, court judgments, and things of that nature. Now, moving forward, a lot of agencies have gotten away from putting the liens and the civil judgments on there, and what you'll find is normally just bankruptcies. So let's start taking a look at a credit report and seeing where you can find that information. So when reading a credit report, the first thing you'll normally encounter is your personal information, normally at the top. So you're going to find your name, your birth date, your social security number, back in the day, it used to be your phone numbers. A lot of times that information doesn't live there anymore as far as your phone number, but you are going to find your employment history. This information does not directly impact your score, but it is important that you keep it up to date. So the next section that you're going to find on your credit report is going to be collections. The collections area of your credit report is normally where those blemishes live. So with that, there's going to be debt that normally, after a lender has charged off, is going to move to that section and indicates that the original lender has sold that debt and their rights to the debt. So when a debt is placed into collections at first, it has a significant impact on your score. So collections has an impact on your score, especially if it's fresh. So make sure that you're always reviewing this section for accuracy, especially with amounts of balances. In addition, verifying the legitimacy of that collections. If it doesn't look right, make sure you report it immediately, and we'll talk more about reviewing and reporting errors later. So moving along on your credit report, the next part you'll find is what I like to call the meat and potatoes, your trades. This is a reference to credit trade lines, which is an account that has been established by a lender. This is going to be the part of the credit report that is showing the activity of the accounts that are performing at this time. So as you can see, where Canton School E, which is the continuation of employees, is located, that would be CSE. And you'll have to start familiarizing yourself with lenders' actual names. Although we refer to ourselves as CSE Federal Credit Union, on a credit report, we're going to show Canton School employees. So if you take a look there, what you'll see right underneath of that is what's called unsecured. What that's indicating is an unsecured debt, meaning that it's not backed by any collateral. It's not backed by a house, it's not backed by a car. That's normally going to be like a personal loan, a vacation loan, or a loan of that nature. The next thing you're going to see if you move to the right is a date of 9/22. That's the opening date. And below that, what you'll see is the verification date of 10/23, which is October of 2023. Moving to the right, you're going to see 1,500. 1,500 is the indicator of the opening amount. Below that, the 466 is going to show you the balance at this time. So the opening balance versus the balance at the time of the report. Moving to the right, you're going to see a number stating 015 M115. So what that stands for is the term. That's 15 months at $115. So let me go over that part again. 015M115 would stand for your term of 15 months for $115. And then underneath that, you'll see a zero. That means this person is $0 past due. If they were past due by any amount, it would report there. Moving to the right, you'll see a consecutive amount of ones. 1, 1, 1, 1. That's good. That means on-time payments. You want to see those ones. So ones are good. If you see a 2, that means you're 30 days behind, or it has reported 30 days behind. If you see a 3, that's 60 days behind. So ones are what you want to see. And underneath those consecutive ones, you'll see 13. That's the amount of on-time payments that have been paid for 13 months. Beside that, you see 0/0/0/0. That's actually going to show you the reporting of a 30-day past due, a 60-day past due, and a 90-day past due. As you can see with CSE, this person has not hit any of those, so each one reported 0. If you take a look at this section, it can kind of be hard to understand until you start to get the knowledge behind it. Once again, if you want to know more about this section and details, feel free to reach out to me directly. And at the end of this workshop, I will have my email address up so that we could have a one-on-one and I can go into more details about this section. So with that being said, the meat and potatoes lives here, and you can find most of the activity under your trade section. So when it comes to continuing to read a credit report, the next part you're going to see is inquiries. The inquiry sections is where hard inquiries live. That happens when you appear or apply for new credit. While impact is normally minimum, this can have a temporary effect on your credit score. And too many inquiries can be detrimental, especially to someone with short credit history or very few accounts. So underwriters also take a look at this section because it can pose a risk, especially if they see a large number of inquiries, which in turn in their minds means you're searching for credit. So be mindful, be intentful when getting your credit pulled, especially if you're going out shopping for the Christmas holidays or back to school shopping. Don't go out there opening cards at every store unless it's going to be beneficial to you. So keep that in mind. So the next part of your credit report, creditor information. What's that? Well, it's exactly what it sounds like. It's where your creditor's information lives. What you can find there is you're going to be able to find the name, the address, and the phone number of the creditor that is lending to you. So with that being said, if you take a look at Kohl's is going to provide you their P.O. box number located in Milwaukee. And to the right of that, they're going to provide you a phone number of 800-564-5740. That number is for you so that you can report any discrepancies that you may find, or if you just need to validate some debt. So this area is important in case you ever find an error on your credit report and you need to contact the creditor that is handling that account. If you have any questions, feel free to drop it in the chat. But moving right along, we're going to talk about what influences your credit score. So listen, when we talk about credit score, in order for me to make you soar, I got to teach you how to win. And when we talk about winning, there's 3 areas I have to make sure you win in. And we're going to talk more about that. So looking at the slide, the first thing I need you to know is payment history is going to be 35% of your score. The next one is amount owed. That's 30%. And following that up is your length of credit history at 15%. Those 3 areas we must win at if we're going to get you to a score that's going to have you soar. So with that being said, the other 2 that polishes out your credit score is new credit and types of credit. So let's talk a little bit more about payment history. If you have a consistent paycheck and you have a budget in place, and you all know how I feel about a budget, like I like to say, that's where the magic happens. If you have those things in place, you should have everything that's reporting on your credit report as far as accounts on auto pay, at least for the minimum payment, so that you don't miss a payment. Missing payments can be detrimental, especially to your credit score. Not only are you going to get a late fee, you're going to get additional interest. That score is going to tank. So in order to make sure you win in this category, if you have those things in place, a budget, a consistent income, put it on auto pay. That way it takes some of the work out of it. All you'll have to do at that point is just review your payment history. Moving to amounts owed. A lot of people get that payment history down and they say, Just, why isn't my score going up? Well, here's the other area, amount owed or credit utilization. So this area, I need you to pay more attention to, pun intended. So with that said, simply put, you want to keep your balances at about, or what we call utilization, about 35% or lower, meaning that you have about 65% of credit available. For simple math, let's say you have a credit line of $1,000. You want to make sure you keep that balance at about $350 or less. The more that they see that that credit is available, the more that score is going to go up, because what that shows is that you're not maxed out. You actually got some money on the table, that you can handle your finances. You're paying things down. You're able to pay your debts down. So credit utilization is the next key where you must win. So the first one, payment history. Next one, amounts owed. For the third, length of credit history. So when we talk about length of credit history, it's important that you try to keep the credit account that is the oldest going. A lot of times what I see is people don't pay attention and they forget about it and they lose it. Or they get upset with the company because maybe they got a late fee that they wouldn't remove and they tell them to close it down. You want to preserve your longest account on your credit report so that you can get the maximum out of that 15% when it comes to weight. So the first thing you need to do, payment history, set it up on auto pay. Second thing we need to do, amounts owed. You need to cut it. Bring those balances down. If you got credit cards that are maxed out, it's time to get paying and stop spending. And the third thing we need to do is focus on making sure you're preserving your credit history. Now, the other two is what I like to call the polish and the detail. It's new credit and types of credit. What we're talking about when it comes to new credit is simply those inquiries. Make sure you're not out there shopping for all sorts of credit, looking to get a deal here, going to Macy's, opening up a card, going to another department store and opening a card. You want to preserve that for good intent and show that you're managing your credit good. The next one is types of credit. That's your diversification. You want to have a mortgage loan on there. You want to have a vehicle loan on there. You want to have a credit card. That shows you can juggle debt of all sorts. So that's what polishes everything. But I don't need you to focus there until you're winning on payment history, amounts owed, and length of credit history. If you have any questions, put it in the chat. So moving right along, how many credit bureaus are there? There's actually 3 major bureaus that most financial institutes use: Equifax, Experian, and TransUnion. Does anyone know what the first credit bureau was in the United States? If you do, drop it in the chat for me, and we'll get to that a little bit later in the workshop. But the 3 major credit bureaus that most financial institutes use is Equifax, Experian, and TransUnion. And although those are the 3 major, there are actually a few hundred credit reporting companies that are out there. But for the most part, most financial institutes are going to use those 3. If you ever have any question with those, you can go to the website to kind of look at the details. There are different models. And what you'll see sometimes is that car dealerships specifically, will use a different model than what maybe a credit union or a bank may use in order to gauge their lending on. So there's numerous models out there with Vantage scoring and etc. And you can always ask your lender which one they used when it comes to your credit report. So when we're talking about checking your credit report, there's a few ways you can do that. The first way is you can come on down to CSC, Federal Credit Union, and you can sit down with a representative and we can go over your report so you can gain understanding and actually see your report. A lot of times when we pull your report, we're going to do a soft pull for you so it doesn't actually affect your score unless you're looking to get some type of lending service. Another way you can check your report is you can get 1 free credit report weekly. That's right, folks. You can now get your credit report weekly through annualcreditreport.com. So those are just 2 ways that you can check your report. There's numerous apps out there if you want to look at to be checking over your report and keeping a mindful eye on it. But those are 2 great ways to do so. And I encourage you, if you haven't come see me down at the credit union, I'll be happy to go over your report with you and give you a better understanding of your credit report. So, identifying errors on your credit report. There's a few things that you need to know. Things you should be checking is A, personal information, misspellings, account details, accurate limit amounts, payment statuses, and unfamiliar accounts. So when we talk about personal information, we want to make sure that name is correct, your address is correct, your social security number, your birth date. And why is that information so important? because you need to make sure that info is correct. And if not, you need to report it. And we'll talk a little bit more about why that's so important later. Misspellings. There could be misspellings on your credit report depending on any lender that you might have went out to get a maybe a car loan through. They spelt your name wrong. If that's the case, just make sure it gets corrected. Account details. This is a big one. You want to review the terms of the loan. Make sure that the monthly and the term amount is correct. You want to make sure your limits are right, so your balances are correct and reporting correctly. Payment statuses, making sure you're seeing those ones. And if you see a 2 and you think it should be a 1, that you're calling that lender and making sure that they're getting it corrected, or you have a better understanding. And you also want to make sure that if you see unfamiliar accounts, that you take a look. And if it's not an account that you're familiar with, you need to investigate and report immediately. Kind of like the CSE. You know, you think you got a loan from CSE, it says Canton School Employees. You need to call us so we can verify, yes, that is us. We are CSE Federal Credit Union. We started as Canton School Employees, and that is our official name. So make sure you're looking over those reports and making sure that you're reporting anything that's unfamiliar. So disputing errors. What happens when you find an error? Well, once you've identified an inaccurate piece of information, you need to submit a written dispute, normally in form of a letter. You also need to contact the Bureau of the report with the inaccuracy so that they have if they have an additional process, they can explain that to you. Responses may take up to 45 days, but you need to review those results and make sure it gets updated. So if you have a dispute, the most important piece is you find out how to report it and you do so. When it comes to written disputes, you may have to follow a procedure that's indicated by the bureau or the creditor, and you can always give them a call or look on their website for further information. You got to stay on top of it until it gets corrected, and for any reason you're having any trouble, contact that bureau with their contact number. So we talked a little bit earlier about the errors and if you find incorrect information, but some of that incorrect information can be red flags, and this is why it's important. So incorrect personal information or unfamiliar collections could be a sign of identity theft. Unfamiliar accounts could be a sign of fraud accounts, and unfamiliar inquiries could be someone trying to open credit in your name. That's why it's important for you to make sure you're reviewing your credit. So with that said, you should be monitoring your credit at least once a week, twice a month, even once a month. Find your number that works for you, remembering that monitoring means to observe and look over. You don't have to spend hours reviewing every detail, but if something jumps out at you that you're not familiar with, that's going to be a red flag for you to make a call and investigate. And with the world we're living in today, with technology being more prevalent, you need to make sure you're reviewing your report to protect yourself and your financial health. Things that you may look for is things like a new trade, a sudden change in your score, missed payments, unfamiliar names on your personal information, social security not matching. Those are all going to be red flags for you to contact somebody and to report it and to lock up and freeze your credit report. Now that you understand how to protect yourself, let's talk a little bit more about improving your score so that you can soar. So when we're talking about improving your score, you must pay bills on time. Guys, I can't emphasize enough. If you don't win in that part, we can't get your score up. Set those creditors or those accounts on auto pay. As long as you have a steady income and a budget in place, you should be able to do so. And if you don't know how to do so, give me a call. The next thing you're going to need to do, you need to cut it. You need to reduce those debts. You need to make sure that you're able to bring those balances down. I always like to say, if you can pay it off in those 30 days, do so. That's why a lot of times when we're starting our teenagers off with credit cards, we have them put gas on the card, then we have them pay it off. Put gas on the card, then pay it off. Even as an adult, you should still be trying to do those practices. If you're putting a charge on it, let's say you're going on vacation and you put a $200 charge on that, try to pay it off in 30 days. That is going to be the way to help you reduce those balances so that you can win in that second category that influences your score, your utilization. The next thing, avoid those new credit inquiries. Don't go out there shopping, opening every card that gives you an offer. Move with intent. Move with intent to have a better credit score. If it's not worth it, don't do it, because your credit score is worth not being impacted and dropping that score lower and lower. The next one, keep old accounts open. Even if you're not utilizing it, make sure that you keep them open. And if they have a stipulation that you have to use it once every 12 months, go put a thing of ice cream on there, put a blizzard on there, do something, but make sure you're utilizing those old accounts. And 5, most importantly, it's going to take time. I'll say it again. It will take time to build your score. But trust me, if you take the time and you're gracious with yourself, you'll get there. A lot of times we live in a right now society. People want to go and just get their score up in 2 days. That's not a good score. Good scores take time. You have to work on that score. You got to put a little skin in the game. Financial institutes, underwriters, they want to see that you've worked hard on your credit, that you put the work in there. That means that you can handle the $50,000 loan that they may give you. So make sure that you're taking your time. You're building those good behaviors to have a good score. Be gracious with yourself. You're going to make some mistakes, but as long as you learn from them and keep moving in the right direction, you're going to excel. So, diversifying your credit. We want you to have credit cards, mortgages, personal loans, vehicle loans. Having a good mix of credit will improve your score. But wait, you don't have to do it all at once. We'll start somewhere. Maybe we start with that credit card. Or maybe we start with a credit builder loan. But just remember, take your time with building into your portfolio, your credit report. Then you get the credit card once you learn those behaviors after having that personal loan and paying that installment. And then you're going to say, you know what, my score's gotten to a good place where I can go and get the vehicle loan. Once you get that vehicle loan and you're making those payments and you're doing a great job, then you're going to go get that mortgage loan. They're going to build on top of each other. So having a diverse credit report is going to show that you're able to handle different debts. Be wise with credit, guys. Read your agreement and terms. Be aware of fees. Pay more than the minimum due. That's going to help you keep those balances down. Stay below the limits. Don't max out your cards. If you have a $1,000 limit, act like it's a $350 limit. Hence back to that 35% utilization. So you want to make sure you're staying below limits. You're checking your monthly statements. Your monthly statement's going to give you an idea of how you're performing with just that credit card. And you're going to report any lost or stolen cards immediately. One thing when it comes to fees, guys, make sure you're aware of all your credit card fees. If there's an annual fee, if there's fees for taking cash advances. Before you get a credit card, make sure you're aware of all these things. All those good behaviors is what helps influence your score, because the more you can make your money work for you, the better you can utilize it, which in turn is going to help you with your credit score, because you're going to have the funds to pay those balances down and to make payments on time. So make sure you understand your credit cards, especially with those agreements and terms. All right. Let's round it out with some best practices, guys. So the first thing I want to tell you, Don't use all your credit cards. If you have 4 to 5 credit cards, that's okay, but don't use them all. Maybe use one, maybe use two. Find a manageable amount that you can handle. Just because you have them all, don't mean you need to use them all. So find that number that's manageable for you, because as we know, life gets busy. And the more cards you have out there, the more due dates you have to remember, the more balances you have to bring down. So if you can stick to just 1 or 2 cards so you can really focus on those, knowing that those are the 2 cards that you have to pay down in order to succeed, that's going to help tremendously. And then you may say, okay, I paid that balance off. I'm going to go to this card because it's summertime and I need to use my Delta Amex card so I can get them flights. It's all about making sure you're juggling your credit and managing best for your personal finances. You got to know your payment due dates. The one thing I always see the mistake on is people go get that card and they don't even know when the due date is. You got to know when your credit card payment is due. That's going to save you on late fees, it's going to save you on interest, and it's going to help that credit score soar. So make sure you know your payment due date. That should be one of the first things you know once you get that credit card. Keep balances within reach, guys. You want to make sure you're keeping those balances down. You want to understand the difference between your disposable and discretionary income. Disposable after taxes, discretionary after you pay your obligations. That discretionary number is most important because after you pay the house payment, you pay for the gas, electric, etc. If you got 1,000 left over, that should be pretty much an indicator of what you can put on a credit card and be comfortable to pay with within that 30 days. So make sure you're not spending more than that discretionary income if you can help it. In addition to that, exercise your ability to say no. If your friends want to go on that trip, we about to go out to the Bahamas, we going to the Jamaica, it's going to be about $3,500 and you ain't got it, you might have to say no. You have to live within your means and be okay with saying no, because the bigger picture might be your first time home. Letting your credit score soar so that you can get a new vehicle because you know the other one doesn't have much longer. Saying no is not always bad. And sometimes it's not actually a no, it's a not right now. So make sure you exercise your ability to say no. Say it with me. No. Okay? The next thing we want to do is budget. You got to have a budget, guys. In order to have good credit, in order for you to have a good score, a budget is part of that foundation. Understanding where your money is going so that you can understand how you can allocate it. So having a budget is very important. And as you guys know, I believe that's where the magic happens with your personal finances. It's like the workout to your personal finances. The more you do a budget, the stronger your personal finances become. So make sure you keep a budget, and you need to make sure you're making adjustments to that budget. If your income goes down, so does the adjustment needs to make sure that the things and your wants go down. So make sure you make adjustments and you're visiting that budget at least once a month, once every quarter, but make sure there's one in place. If you need a boost to your credit score, one thing you can consider is being added as an authorized user. This can help boost your credit score. A lot of times where we see this is when parents want to give their kids a little bit of a head start. They'll add them as an authorized user to kind of help give them a boost to their score. Sometimes you may see a grandparent help a kid that's just starting off, maybe 20, 22. They got a couple trade lines going, but they just want to boost that score. They'll add them as an authorized user. It has to be somebody you trust, because it can also work in reverse. If they get a blemish on their credit, they can bring you down. But being added as an authorized user to someone that has good credit and good credit history can boost your score. One of the final things I encourage you guys to do is you have to continue to learn. Never stop being curious. Continue to learn. Things are always changing. In order to become financial savvy, you must make good decisions, and especially when it comes to staying relevant and continue to grow by learning. So continue to learn, stay curious. If you don't know something, ask an expert or go to your local library so that you can read up and gain knowledge on that. But in order to be successful financially, you got to continue to learn. With all that being said, guys, if you have any questions, we'll have some answers. You can always contact me. My email will be at the end of this workshop and I can answer you individually, or you can drop them in the chat. I'm here with my fabulous team, Tim and Sharon. So if they do see any questions in the chat, they're going to let me know right now. If not, we'll continue to move on and we'll give you some resources. So I'm going to ask Sharon, do we have any questions? Looks like everybody's got their active listening ears on. If you do pose any questions later, or if you're watching this video later because it will be archived, just send us an email either to myself, Tim, or Sharon. Some resources that you guys can use. You can go to our CSC blogs. They're fabulous. They're great. They're full of insightful information. All you got to do is scan that QR code. We also use Bonsai for different articles. This one focusing on best practices for using a credit card. There's a virtual coach on how do you build credit. So you can scan any one of these QR codes in order to access that information. The Bonsai is very good, guys, for kids or adults just wanting to learn a little bit more at their pace or their leisure. And it also offers what we call a credit card payoff calculator, showing you if you got a balance at a certain interest rate, how long it would take you to pay it off. So these are some great resources that you guys can use. I appreciate you guys. As promised, here is the information that you can contact us at, which is going to show our email address, our phone number if you can't reach me by email. And once again, I always want to thank you guys for giving me the one thing that money can't buy, which is your time. And if you do have any questions, please let me know. And I will have an answer for that question I posed earlier. You'll just have to follow up with me. And I'll be putting that on one of our websites or our next workshop to let you guys know. So I appreciate you guys. Thank you for listening. If you have any questions, contact us.